Well, as gasoline prices go down again, the pressure to reform energy markets may be easing, but not at the Commodity Futures Trading Commission and not if Chairman Gary Gensler has anything to say about it. He made that much clear today while talking to reporters at the Platts Energy Podium. Margaret Ryan was at the discussion today. She joins us now with a closer look. And Margaret, you've been hearing from Gensler for months now, and each time you talk to him or get to question and answer with him, he seems a little more confident in what he has to say.
Yeah, and he's really become a little more clear in exactly what he wants to see. He said before he wanted reform, but the specific points of the reform are becoming clearer and clearer. I mean, he's very soft-spoken, he's very polite, but today I think he left no doubt whatever where he stands.
Let's not forget the financial system failed America. The regulatory system failed as well, but the financial system failed. So what we are talking about is a bold change. This is not meant to be just something at the margin.
Now that reform, Gensler says, should include at least 4 elements. He wants capital requirements for dealers. All trading parties should have to post margin funds in separate accounts that would be protected in case of bankruptcy. Dealers should have to meet strict new standards of conduct, and as much trade as possible should be routed through regulated clearinghouses, rather than, as he put it, the 10 to 20 large financial institutions that now handle most derivatives trading.
I think that the best way to lower risk is to bring the 4 features I talked about earlier, but that's capital on the big dealers, margin to be posted by the counterparties, business conduct standards for the back office, and central clearing. And let me remind you, we had something like a clearinghouse fail last year. AIG was a counterparty for hundreds of billions of dollars of transactions, and $180 billion of U.S. taxpayer money went in there. Every one of you, every one of the reporters in the room, everybody that might listen to this podcast or has money in AIG, and that's a failed central counterparty. We don't call it a clearinghouse necessarily, but that was a failed central counterparty. What we're recommending is separating out as much as we can. Let's move it out of the AIGs. Let's move it out of the big Wall Street firms to the extent we can and move it into something called a regulated clearinghouse.
Now, regulating all dealers and forcing most trades through a clearinghouse would let regulators set clear positional limits across multiple markets. Now, Gensler said he's been meeting with European regulators, and there's, as he put it, a great deal of optimism they can find common approaches to limit the amount of trading that tries to move outside of regulation. He was also asked about pending climate legislation that would create carbon allowance markets. Now, the House passed Waxman-Markey bill would split oversight of carbon markets between the Federal Energy Regulatory Commission and the CFTC. The Senate's Kerry Boxer bill gives market regulation entirely to the CFTC. Now, Gensler told me he and FERC Chairman John Wellinghoff have spoken about how they would coordinate, but he called his agency well situated, his words, to regulate the entire carbon market because it already oversees SOX, NOx, and RGGI markets.
However Congress decides to move forward on this, we'll work with our sister regulators. Even if we were the ones to oversee the trading markets, there's a lot of coordination with other regulators as well. The Environmental Agency, or Environmental Protection Agency, the U.S. Department of Agriculture, and other regulators would be fully engaged in the allowance markets and the compliance in those allowance markets and the central registry that's so important in the marketplace. But our oversight would be to the central marketplace, the trading, and so I would envision that we'd be working with sister regulators in just about any way this works out.
Now, we'll hear more from Gensler tomorrow when he testifies on pending market reform legislation before Representative Barney Frank's Financial Services Committee in the House.
Margaret, I had the chance to talk to Gensler briefly. Within the first 2 weeks of his taking his post right now, he really didn't have any answers, although he was quite polite and honest, as he said about it, saying, "I just don't know yet." Clearly he knows now, and I want to ask his reaction to his role potentially in the carbon markets, because he's being very clear about what he could do here.
Yes, I think, well, he always expresses it. I've heard him several times now express it as a readiness to do what the Congress wants, you know. But it's really clear that the CFTC is just hand-rested and ready to take on this carbon market. He really unveiled that readiness. It was in early September before the Senate Agriculture Committee, and now, of course, it's already in the Kerry-Boxer bill. You remember in the House they had to negotiate to get agriculture into that bill. No negotiation even in the Senate. So, you know, in FERC's Wellinghoff also, we have also heard from him, and he's openly said, oh, if the Congress wants me to do it, you know, the FERC is ready to take it over. He's from Harry Reid's Nevada. What's on Gensler's side is that the agriculture committees actually have oversight over the CFTC, not over FERC, and that may be one reason that the agricultural committees will weigh in to keep the CFTC as the market regulator. You know, we're just going to have to see who swings the bigger bat here.
Well, I want to follow up on your point that Chairman Wellinghoff is a Nevadan, like the majority leader, and ultimately, Margaret, this will be Harry Reid's bill when it all gets put together and introduced on the Senate floor. Do you really see that being a factor in terms of who regulates here and giving the chairman what he wants?
Oh, I think it may indeed be a factor Harry Reid is the leader, but that doesn't mean that he can tell everybody what to do. This may in fact be something that he will have to cede in order to get the votes that he needs to take this through on the floor. And I think if it was a choice between, you know, pushing some regulation into FERC and getting the entire bill through, I don't think there's any question that Reid would make that concession.
And FERC could potentially, Margaret, have its hands full already with the new transmission issues it could be in Harry Reid's bill.
Oh, absolutely. On the energy side of the bill, there is no question that FERC is going to have new responsibilities. I mean, whatever shape they take, there are going to be new things in there. FERC is going to have plenty to do. They're not going to be looking around for what do we do now.
No one will be left wanting for work after this. All right, Margaret Ryan, thank you. And we'll hear from Chairman Gensler tomorrow as well, right?
That's right. He's testifying before Barney Frank's Financial Services Committee. They're having their first hearing on Frank. You'll recall Frank and Colin Peterson, the chairman of House Agriculture Committee, have a bill they've been working on jointly to actually overhaul financial services reform across the board.
Okay, and that's tomorrow morning on the House side. Thanks, Margaret.